Traders, welcome back to our price action trading lesson. We're looking at S&P 500 mini futures. The time frame is 2000 tick chart, and the overall structure right now is a bit more bearish because we started with bearish trend working lower. Uptrend has a small break new high. We have small triple test, and prices are right now breaking the EMA, and we actually have the highest high of this pullback. First entry long failed, second entry long failure. We're going to get a break below this bar right here. Now this right here is a failed second entry long, which makes sense because we broke below EMA and we expect this push down to continue. But we have exponential moving average exactly in one of these bars. These bars are stacked right next to each other. So once I see this is congestion. It is exactly around the market open. So I don't want to take a setup during the stock market open because there can be spike in volatility, but it ended up working, but it was just too congested. Because we created this significant push down, I like drawing slightly wider channel because it aligns with the overall bias. We broke higher and we broke back below the EMA again, and now we have second entry short. This is the new low, and you can see there's no break below these bars. So even though you may think there is a first entry short, there needs to be a trigger break below either one of these bars lows. So there is no break here, no break here. So you have first entry short here, working lower, pull back, second entry short right here, but we can't take it because this was significant spike above the EMA, and it's far from the EMA. The body is so far from the EMA, not even the tail is touching it, so I can't take a second entry short. However, we corrected a little bit more, and this is interesting. Once again, I'm going to use the highest high of this correction right here. First entry long, pullback, second entry long failure. There's going to be a break below this bearish bar. We have another failed second entry long, which is quite tempting setup. I took it, but it's a little bit more aggressive because, as you can see, we're going sideways. EMA is quite flat. We broke higher above the EMA, so more aggressive trader can consider, but it aligns with the main bias. There's a failed second entry long, work for a quick little scalp, and the market is correcting, and we're back above the EMA again. Okay, so now I have to explain why prices are back above the EMA. In fact, I can see EMA going sideways, consistent price swings up and down, so my goal is to right now draw small consolidations. I'm going to use the lowest point and the highest point. I want to combine price action patterns together, so it is easier for me to predict where the market is going to go while I keep following these short-term trend lines. So our trend is working hard, breaking new high. We're back below EMA and we are struggling to reach the resistance. I'm going to redraw a brand new downtrend, working lower, something like this. We have a, once again, highest high, first entry long, pullback, second entry long failure, but the signal bar is horrible. I don't want to sell right into these lows. You know, a little bit choppy, I'm not gonna take it. Downtrend played out with the break, push to a new extreme. So you have a break and new low. We have overlap again, horrible signal bar. So I need to see push above EMA for me to start considering long opportunities. But prices continue to work lower, and we continue to go lower again. So now I'm getting more information about the structure. And what is the information? I can see EMA keeps rejecting every single time. I can see that the prices are struggling to reach the resistance here, and we have bearish imbalance series of lower highs, which makes sense because I can combine this information right here with this initial downtrend working lower. This was the pattern we started with. So we spike down, consolidation, but every single major high is lower and lower, so I'm not going to be thinking about fading the breakout back into this consolidation. There was no trigger, so there's no entry anyway, but had there been trigger, I can't be fading because the bearish imbalance kicked in and market keeps going lower. In fact, I can now redraw a downtrend like this because it aligns with the EMA keeps rejecting prices, it is with the main bias, and we have a second entry short. You have a second entry short because I can use the lowest low to count first entry short, pullback, second entry short. But the signal bar is horrendous, inside bar. You can also view it as a breakout pullback pattern. We broke lower, came back, tested this. So you can see these key levels are important. Price action is giving you all the information you need. But we skip inside bars, so I can't really take it. If you have better bar than inside bar, you can consider, but on my chart, I simply can't take. This is interesting because this right here looks like a visual lower high. It's technically a first entry short because we have micro level bottom. But it is at 2 key entry points, and more advanced trader can see that this is a lower high to this second entry short. Few traders took it. I can't blame you. If you're a more advanced trader, a little bit more aggressive, you can consider. because your 2 key entry points, breakout pullback happened, it's confirming all the structure. So market keeps working lower, correction phase ended at the key entry point and a brand new push phase started. We're so far from the EMA with the body right into these lows, so I need some stronger pullback. I can't take it even though this worked. Now we have overshoot, but in order for me to see overshoot clearly, I need to make sure I'm going to extend my trend lines. We broke the trend channel line. We disrupted the equilibrium. You can see the equilibrium of prices inside this channel. How nice there's a push phase and correction phase every single time. This is exactly what you want to see. We broke the trend channel line. This is oversold area. I don't need any indicator, any stochastic, any order flow. I can see just using pure price action and market geometry, we have stronger selling pressure and we have oversold area, which means overshoot will generate stronger pullback in the opposite direction. It will break the trend line and sometimes can even reverse this entire trend. For this, you would need to observe the retracement, how deep the retracement is. The deeper this bullish retracement is going to be, the more you're going to adapt, okay? But if there's going to be second entry short after overshoot at the EMA, you would have to skip. There is no second entry short regardless, so no problem. Okay, you're breaking the trend line and sometimes even the overshoot is measured. That's small little nuance. It's not really written in stone, but many times the overshoot can create equal break. So you can sort of expect right now the overshoot to end. I expect new extreme. That is the default thinking. Even though overshoot can generate the reversal, that's not my default expectation. My default expectation is still to expect for this downtrend to get the new low. But in order for that to happen, I need to see break below EMA. That's the confirmation that the sellers are back in the market. Okay, a lower high, horrible. I can't take it because this uptrend doesn't have new high. It's after overshoots. I definitely need a failed second entry long. Can we get a failed second entry long? And we cannot because we pushed already too far down. Remember, I want to catch the failed second entry long right below EMA here. The further down you move, the more I'm treating this as a first entry short. So we have technically failed second entry long, but it moved too far down. You want to catch it when the move is about to happen somewhere around this area right after break below EMA, because the bulls are going to get trapped thinking we're going to go higher to test the new high. Now that the push down already happened, not that many bulls are going to get trapped, and I now want to see a second entry short, because also the further down you move, the longer this correction gets and the more there's a chance there's going to be like a pullback. So the signal bar is not ideal as well. So given everything, especially if you don't have a break in new high, if at least you have a break in new high, you can consider taking this aggressive failure, but I really need a second entry short. Can we get it? We don't have count reset because as you can see, this low is still lower 1 tick or 2 ticks compared to this low. So there is no count reset. And now we have second entry short, and not only second entry short, we have triple test. One bounce, I'm going to mark it the arrow. One bounce, second bounce, third bounce. And this is visual. 2 leg up, pullback, 1 leg up, break, second leg up. So this right here is a second entry short combined with the triple test. The context is absolutely perfect. This downtrend is predicting we need to get new low. The smaller one needs to get new low as well. We have triple test. You have to use double bar entry because you cannot sell below this bar. But this is textbook 2 leg up, pullback, triple test, all the context aligned. Perfect price action, second entry short, triple test. We expect new extreme and market continue to go lower, and we have a break and new low. So now what I'm going to do, I'm going to pause looking to go short because downtrend played out. We have failed second entry short below EMA, so I can't really take it. We have a high low here, but this is not enough. It's at the top of the move, and I need to see the reversal pattern above EMA, okay? Because the high low is not sufficient enough. I need to see failed second entry short at minimum reversal pattern to change the course of the market. Prices continue working lower. We have a lower high again, but I feel it's a bit early to sell even though it's not working, but it's early to sell. We just had a break in new extreme. This is the area where I'm extra patient. I need to see some stronger uptrend to start thinking about buying, or some stronger push down to resume the bearish trend. So prices can chop along here. We have a failed second entry long, but once again, we just had a new low. Gotta be careful. You can see we have bottoming pattern here, support being formed, so I can't take anything. And this is interesting because prices are working back below EMA. So now I can see that after break and 2 legs to new extreme, we have, instead of market reversal, we formed small consolidation. You can see how broad these two legs are. The broader they are, the more it means there is bullish depletion. So we are forming small consolidation. I cannot deny that we have small consolidation right here. So it's not acting as a reversal, but as you can see, we even broke this consolidation, so it's not acting as a correction phase. And once I saw this, I have to explain why after breaking extreme, we can't even correct. We are instantly breaking lower again. So it looks like there's some wider pattern. I drew this big one right here because it has second swing confirmation, third swing confirmation, and it explains why prices keep going lower. So let's see what's gonna happen. We have only a first entry short breakout pullback to this key level, but it's only first entry, so not ideal. We're breaking massively above the EMA, so I have to redraw. Brand new uptrend, breaking new high, but we have another push up. We have lower high here, but I can't take it. It's not confirming anything, okay? It's confirming what? New low, first entry short, second entry short, third entry short. That's not a setup. It's not confirming much. We have small support, EMA flattened, so I need at least felt second entry long because we don't have confirmation of no good setup. We spiked above EMA, consolidation. We have a second entry short, but we broke above EMA inside bar. You want to see prices going lower, not higher. So even more congestion, so we have to be careful here. Something like this. Market is going sideways. Okay, can the trend line hold? Of course, I cannot sell inside bar. I need to break below EMA to confirm this because the trend line is big. And we are trending higher. Okay, so this is confusing. I'm going to redraw now. Small spike and a channel pattern. Break. New high has been made. Okay. Second entry long. Prices keep working higher. Another second entry long. Now there's also a chance there's some wider spike and a channel pattern like this. Problem is, this doesn't align with the big downtrend. And this was quite confusing area. When I'm watching this, the downtrend is not really acting as it's in play because we're completely breaking higher. EMA keeps rejecting. It looks like there is wider uptrend, but there's too much conflicting bias because we've been working lower the entire day. So if I see this, I cannot be aggressive, okay? So unfortunately, I can't be thinking about long opportunity just yet because we've been working lower the entire day. So I have to be careful. New high here. Two legs down. We're back above the EMA. We have actually interesting high-low confirmation setup over the second entry long. We also have some small consolidation being formed. So you can consider, I can mark this up right here, high-low confirmation setup. It's back above EMA. Even if you have a break in new high, you know, downtrend played out, and it can be decent for a small scalp. Market keeps working low. I can't take anything, even though this is a felt second entry short. It's lower than high low. We're going sideways. You know, no good setup here. At this point, I was thinking the downtrend is going to get a new low, but it's too late and market ended up reversing back up and it's about to close. So this is the overall structure for today. If I'm looking back, I can see that prices didn't really respect this wider downtrend, but you have to explain why after breaking low, prices, instead of reversing, we kept working lower and kept working lower again. It looks like this was just prolonged bearish pressure. Either way, price action was rather slow today, but it is because tomorrow is a trading holiday, the Thanksgiving holiday. So no trading tomorrow, and we'll be back trading on Friday, although it is only half day trading. A lot of times these days tend to be very slow because traders, they will take the day off. So we will come back on Friday and see if it is tradable or not. So I hope you had a good trade. I'm going to wrap it up. I'm going to talk to you next time. Good luck with your trading.